One of the main things that I've been asked is, are the markets putting in a bottom? Is the bottom here yet? And that's sort of the question, but it's incomplete. Let's talk about how we can complete this question in a way that leads to a preferable result, right? It's never about a question of the markets, right? The markets aren't something that really exist, although generally speaking, I would say most traders are thinking about the S&P as sort of this combination of the markets. Remember, there's treasuries, there's currencies, there's indices, there's metals, there's energies, and on and on and on, right? So when I'm talking about the markets, that's really going to lead me to a question that has no answer. Is the bond market anywhere near close to bottoming? That's up to Powell tomorrow. Is the euro close to a bottoming pattern? Well, that's maybe answerable because we've gone from a red trend to a yellow trend. So if we can start to develop the patterns of a bottoming action, then yeah. But remember, we've been neutral before. And in that neutral environment, we broke down through the 200. So you might think, wrong, until we get back above the 200, is there a chance that we're going to continue to chop? I think that's pretty likely. If Powell starts to really add some clarity to rate cuts sooner, say May-ish, right? May-ish, then that's likely going to start to send the yields lower and symbols like TLT and ZB higher. Also symbols like the euro, FXE, 6E, also higher because lower rates in the US would suggest that we're going to have, the bond market move higher, the euro move higher, dollar move lower, the indices move higher. But which index, right? So when we talk about the market that I am, or I should say the symbol, right, that I'm looking at as the one that can rally is the NASDAQ. And it's actually pretty simple. It's not even that complicated because we've been neutral in the NASDAQ now, August, September, and completing October. The NASDAQ survived the move to the 200, remained above it, and never broke into a downtrend. So this is the strongest of the four indices. YM, Russell, ES, right? NAS, this is the strongest. Which is the weakest? The Russell. Next weakest? YM. So I would call this 1, 2, 3, 4. This being the strongest, the NASDAQ. The reason we can look at this with a little bit more confidence is the pieces of the NASDAQ are far more resilient than the pieces of other indices. So what are the pieces? Well, this is really a matter of kind of looking at the broader average, whether that be NASDAQ or QQQ, however you look at it. And then we're going to have XLK, XLC, XLY, and SMH. And the more of these that are moving higher, the more likely the NASDAQ's going to move higher. So think of these as cylinders to the engine, if you will. So the logical question really would be, okay, Rog, what do we got going on in XLK? Looks a lot like the NASDAQ, right? Bouncing off the 200. Now, these white dots aren't just a 200 exponential moving average. It's actually the 8-period crossing with the 200. As long as the 8 remains above the 200, these dots will plot, and they represent where the 200 exponential moving average would be. But the reason the dots light up is because the 8 is above it. And it's a really good way to find when the 200 is going to be far more effective as a dynamic support or resistance level. All right. So once again, you see the XLK looks a lot like the NAS bouncing off the 200. XLC, same thing, right? Now, here's where it gets interesting. XLY is struggling. XLY is struggling. And you'll see here, let's go open up XLY. As a futures trader or as an ETF or stock trader, understanding all this synergy just makes for far better follow through and trade selection. When I take a look at everything that's so weak in consumer discretionary, right? Tesla's one of them, booking's another. And then anything that's trading below the 200 would be yet another reason to be bearish. And so those are, and not to mention that this is heading lower too. But is this enough to break the NAS? Clearly it's not. And the reason for it is it's not as heavily weighted as XLK and XLC. Now, sort of the wild card is semiconductors. And semiconductors are actually doing fine. NVIDIA's okay. SMH is above the 200. I'd like to see Taiwan Semi and ASML above the 200 as well, but there's a number of key stocks that are, most notably NVIDIA and Intel. And clearly that's enough to keep SMH with a little bit, see right here, a little bit of support in this area. So we're definitely duking it out here. But nonetheless, that's how I'll look at the way in which the NASDAQ should be far more resilient. And if you're wondering, well, Rog, what about the S&P? The S&P has a ways to go. And the reason I say that is the S&P is in a downtrend. Take a look at the structure. The S&P is below this 200. And granted, while the 8 and 200 are very choppy at the moment, we're still below, obviously, where that would have left off. That's pretty bearish. And then here is the clincher. Now, just as I showed you the sectors for the NASDAQ, it starts with XLK. So obviously, S&P and NAS are very simpatico. But that's not where it ends. XLF, XLV. And this is where the problems arise. In fact, these are why the Dow is also as weak as it is. So the S&P can move with tech, but it's still got to give a nod to the financials. Total mess. Here's your 200. Red trend. This is JP Morgan. This is Berkshire Hathaway. XLV, downtrend below the 200. This is United Health. This is Johnson & Johnson. And even though United Health is moving up really nicely, if you say, Rog, how do I trade healthcare and I want to be long? United Health. Rog, I want to trade healthcare and I want to be short? Johnson & Johnson. This structure, the top two stocks in healthcare, one moving higher convincingly, the other moving lower, is just absolutely more evidence of how difficult this environment has been, this trading environment of October. But this is where it's also important to remember that every single morning, regardless of short-term swings, long-term swings, or day trading, we need a bullish list of names. We need a bearish list of names. There's no such thing as one watch list. It's which names do I want to buy, which names do I want to short or get puts in, right? So two lists. XLV is such a great example of your bullish is UNH, your bearish is Johnson & Johnson. And when the top two weighted names in the sector are going in different directions, don't even touch the XLV, right? Just stick with the relative performance within that sector ETF. So I'll show you right here what XLV looks like. And notice how easy it is to find those outperformers when I look at them. And this is a relative scan because these are all related to each other based on their weighting. They're all involved in the same corner of the market. So if I want to buy something, there you go. Not much else to buy, is there? Everything else, Johnson & Johnson, Bristol, Danaher, Abbott, Thermo, Pfizer, these are all your best shorts. So you might say, well, what about Merck and AbbVie? And Lilly? Lilly I would actually put in the buy camp, Merck in the short camp, but in terms of relative outperformance, stick with UNH and then find any one of the downtrends. And I actually think that Johnson & Johnson and even Pfizer might be the better way to go. Thermo looks great, right? We know which stocks to leave alone. We know which stocks to focus on. We know which direction to focus on them. If you're struggling with, hey, Rog, I'm putting on the right kind of strategy. I've got good timing. My indicators are telling me I'm doing the right thing. You know, this is so true. You can do the right thing for the wrong symbol. You could set up the most beautiful long call, butterfly, debit, whatever, but do it for a symbol that doesn't have the higher probability of follow through, right? That's not your fault, right? You did everything you thought you were supposed to do. But then you say, wait a minute, could I have done it somewhere better? And that's what brings us back to when people say, well, is this the bottom? My question is, for what? Is it the bottom for the NASDAQ and different tech stocks? Very likely. Is it the bottom for the Dow or the Russell? Very unlikely, especially the Russell. Extremely unlikely. In fact, October has given us a roadmap very likely for the remainder of the year, most definitely a roadmap for December. When we go into the last 3 weeks of December, even the December month as a whole, October has given us the roadmap to where the window dressing and the tax loss harvesting is likely to take place. Because at the end of October, we have many mutual funds with the October year end. So if you're looking for something to echo into the end of the year, October might just have given us the roadmap to what we want to do then. November is going to be its own beast, but we can turn on the October roadmap in December. And this is going to be a month to study, especially if you're looking at how the year is going to end. The wild card is going to be how clearly in the November and the December meetings, November 1 and December 13, does Jerome Powell start to signal the rate cuts are coming, and hopefully sooner. But if it's still fuzzy, and if it's still more of a May, June, July conversation, October's told us exactly what we should be doing come December, all right? Which means NASDAQ should be supported, Russell, regional banks, financials might be very, very tricky, and the S&P ends up somewhere in the middle. Tactically, we're probably going to want to keep with short-term swings and day trades as we go through the rest of the year. Hope this helps. I'll see you in the next update.